The big story here is very simple. We had the greatest boom in history. I was one of the few economists way back in the early to mid 80s to say this isn't going to be another boom. We're not catching up to Japan. Japan's going to fall in the 90s and we're going to surpass them and have the greatest boom in history. It was just the baby boom, the largest generation in history due to go up their spending wave into age 46. I can be that precise about when the average person spends the most money in their life. And we'd have this great boom and then it would turn into a great bust from 2008 to about 2022 or 23. So with that started to happen in 2008, but then when the recession started to look like a depression and Ben Bernanke was in charge and his thesis was the Great Depression, so he knows what a Great Depression looks like. They've just been printing money and running huge deficits. We now have $19 trillion in deficits since the 2008 downturn and $8 trillion in money printing, although they backed off on that a little bit, but the deficits are still 2/3 of the biggest, longest stimulus program in history. And people don't get this. The BO economy is pretty good. It's good because they poured $27 trillion in it, which, by the way, when I compare that to GDP, would have been enough for us to grow just on the stimulus at 6 to 7% a year. So even though this has worked and avoided a long downturn in between the baby boom and the millennial generations, and we do get these long-term downturns like the 30s and the 70s about every 40 years on this generation cycle, okay? So it's like, oh, well, we avoided a long downturn. We got the 2008 crash. We ended at that. Well, to me, they've created a bubble, which I cannot even compare to past bubbles. This thing's now gone 16 years instead of the normal bubble phase being 5 years. It's gone to heights nobody's seen before. So I'm telling people, look, finally, these tariffs are the perfect trigger to bring down something that's already been stretched. In other words, we should have seen 2008 and that downturn should have lasted longer. They blew us out of that. And then we should have seen another downturn to finish off before the millennials came along, which they're already starting to turn up now, which is the good trend. But we've got this over-debt, over-bubbled economy, which does not allow us to have a millennial boom that this generation deserves. So I still say we need to see a crash. We need to get down all the debts and the bubbles because these things stand in the way of the future. And that's what I think's happening here. I think we've started. The signs that I'm right will be if we are down, the first crash out of major bubbles, and I've studied everyone in history, tend to be 40 to 50% in just 2 to 4 months, okay, the first crash. So I think we may be in that now since late January, okay? We may be starting to go down. We've seen as much as 25%. In my case, in its worst case, but it's also my best case, that this first crash takes us down into the summer 50% from the top on the NASDAQ and QQQ, NASDAQ 100, and 40% on the S&P 500. So my message is, folks, it makes sense to sit through most corrections. This is not one of them. And we've got a bounce here where you can get out and at least be cautious in the summer. But corrections and crashes like this tend to take at least 2 years and more like 3 years to play out, like 29 to 32, 2000 to 2002, the first tech bubble. And this is bigger because this time we have a demographic downturn and a bubble burst. I'm going to be wrong if this bubble's not bursting, okay? So, but if it's bursting, nobody's telling you what happens when a bubble bursts. And if anybody tells me that this is not a bubble, I can't even compare this to past bubbles now. It's been 2 to 3 times the length and double the magnitude of any bubble in history. So nobody can tell me this isn't a bubble. It's just a question, can they bring a soft landing or not? And then I'm just saying there's never been a soft landing in history to any bubble of this magnitude, period. He seems to be determined to put on these tariffs. He got elected by what I call the all-star wrestling fans, which is the swing vote. My father was in politics big time, and it's the first thing he taught me. 20% of people decide elections, okay? And he's promised these people he's going to bring back business to America. He's basically saying we're going to stop progress. We've seen the greatest booms, not only since the turn of the last century, early 1900s, but just in the last couple of decades. I mean, greatest boom in history, and it's because free market capitalism works, and it's worked for 200 years now, and democracy is just the way that you keep everybody invested in the system so, people don't revolt against it. But this is the greatest thing, and what we're doing here by putting on tariffs, by telling the economy it can't have a recession, I'm telling you, if there's one thing I know from being a turnaround manager, Fortune 100 down to small new ventures back in the 70s and 80s, is that the economy has to have recessions to clean things out, and we haven't had one. I don't count COVID. It was a few weeks. It was a minor thing. It was artificial. We haven't had a recession to do this in 16 years, the longest time in history. Economists are playing God to the economy, and in free market capitalism needs to be free. First four letters of free market capitalism, and this is the biggest attack on it in history. This is the last time this has happened. What I'm saying to people is it is a longer, bigger bubble. It's 3x in time. It's more than 2x in magnitude of a bubble is 29, and all it took was those tariffs as a trigger. The tariffs didn't cause the Great Depression. It's ridiculous to have a 12-year downturn and stall an economy over temporary tariffs. But those tariffs were a trigger back then, and these tariffs, I think, are going to be a trigger now. And if I were advising somebody like Trump, I'd say, don't throw on tariffs now, because it's going to look like when the economy reacts more than it should just to the tariffs, that it was the tariffs that caused the downturn. This downturn should have happened between late 2019 and late 2022 and been like 29 to 32. And we should have been long over it. And the millennials would be bringing us out into a longer term boom again, but we didn't get rid of the debts and the bubble. So now we're going to have to take away from the millennials boom to settle out the debts and bubbles from the baby boom boom. This is bad economics. It's the opposite of free market capitalism, period. And anybody says otherwise, when governments tell the economy you can't have a recession, you have to do this, you have to grow this much, that is not free market capitalism. And the markets are a lot smarter than our officials are. If you look at the bond markets, worry more about inflation. The bond markets are worried about inflation, despite these tariffs and stuff that get slow. The stock markets are worried increasingly now, especially with the threat of tariffs, of a recession. So, slowing and higher inflation is the worst of all worlds. And again, that's what I'm saying. This is a perfect trigger. This should have happened before, okay? The weakest part of the economy would have been the early 2000s, the last 2 or 3 years, when the baby bust was bringing us to the slowest natural growth. They're coming out of this. 2024 is their beginning of the next boom, which is very strong into 2037. But how can the economy come out when we never cleared up the debts or the bubbles? How can the stock market go higher when it's already bubbled beyond any valuations and stuff in all of history, except for 2000, the last tech bubble, when PE ratios got slightly higher than now? Again, it's government officials and economists saying, we love free market capitalism, but we just don't ever want a recession, or we like mild inflation, but we don't want high inflation or deflation. Inflation caused the greatest reinvestment and restructuring of economy in the 70s in history, and along with demographics, set us up for this great boom. Deflation is the quickest way to restructure, clear out bad debts, zombie companies, and we're at record levels of debt and zombie companies ever. We have to do this to go on, and they've already pushed us 5 years thinking, we can escape a major downturn. They did. I'm saying I think we're going to see it now in the next 2 to 3 years instead of 2020 to 22 when it naturally would have occurred. As soon as the economy starts slowing, then businesses which have way overexpanded are going to cut back on capital expenditures and cut back as the economy slows in place. This is obviously bad for workers, and then these workers that get laid off take down consumer spending, and then the more consumer spending goes down, the more the economies go down, the more everybody gets scared. So that's the problem with bubbles, is they go up faster than normal, they're over leveraged, and then when they collapse, they go down stronger. I'm saying there's a point where the government can say, well, we printed 10 trillion last time, and now we're going down again, so we're going to print 20 trillion this time, and people just yawn because, isn't this the third or fourth time you've done this? We have a downturn, you print more money than ever, run bigger deficits, and then we end up in a bigger downturn. At some point, people realize, you really don't get something for nothing. I think they're in a box. The big mistake the Fed finally made, which has cheered me up, frankly, because I want an end to this endless bubble, is that they overreacted to COVID. COVID was a short-term crisis, just like the influenza of 1918 to 20. Exactly, lasted just as long before it got everybody infected and then disappeared. They blew the roof off. The biggest stimulus, deficits, and money printing, 11 trillion out of the 27 trillion total, happened in 2 years. And that's what set up this rebound in inflation and then the tightening. And now I think you're going to see, without further escalating stimulus, the economy's just going to fall, and they're going to be too late to stimulate strong enough to stop it because they overreacted to COVID. So that was the big mistake. If you're going to keep a bubble going, which I don't like, bad advice, but if you're going to, don't overdo it like you did in COVID, because now they've set up to say they would look like really idiots if they went the other way and got extremely easy so quick. So they're going to be too late to react. I think it's going to be summer before they even react.